Hey everyone, it's Nick with Us versus Herd. Today we're going to be covering the stock market, kind of what we see in the future, and some of the pitfalls that I definitely see ahead. But if you want to get connected with us, links are below in the description to our Discord, our options trading group on Facebook, and you can shoot me a text at the number below. If you want to just say hi, if you have any questions, let's just chat. But first, I want to talk about the stock market and kind of where it was at today. Today is June 1st, 2022, and things got pretty spicy today. I mean, if you look at the Nasdaq today, we actually gapped up at the open. We were up, 100, couple hundred points, and then this thing just got obliterated. Same for S&P, same for Dow as well. And Nasdaq was actually the strongest out of all of them, but the S&P, everything just cratered. Dow cratered. I mean, it was just bad, and everyone's like, "What's going on?" I thought we were, we were out of this mess. And the thing is, like, we've had a few green days. I mean, we had a nice, finally on the S&Ps, we got back above the 10-day moving average and seemed like we were holding. Nasdaq, which I primarily trade right now, got back above the 10-day moving average as well. And people start getting bullish. You got Jim Cramer over here saying it's going to be a very nice summer. This came out just last night, actually, yesterday at almost 7 p.m. Eastern time. Chart suggests it's going to be nice. We had futures up last night. Everything's good. So what's going on? Why are we going down when everyone's saying going up? Now, the thing is, Cramer, he's for the retail trader in terms of getting people to buy. Not necessarily. He's good for marketing. He's not good for investing advice. Obviously, everything that I'm saying today is not investing advice. It's my own personal opinion and how I feel and how I view the market. But Jim Cramer, when Jim, we know there's an inverse Cramer ETF. I mean, it's performing very well. And Jim last night said to buy, and the market was up. People were buying, and then intraday, I mean, this thing just got, it just got demolished, right? So, what's going on? I mean, first off, like, we're way below the 200-day moving average. Like, the purple line here is the 200-day moving average. Like, if you're below the 200-day moving average, you're below the long-term trend here. I mean, not only that, we're below the 100-day and the 50-day moving average right in here as well. Like, we're way below, and we're trending down. I mean, maybe was like a little bit of a bottoming out here, down here, but then we ripped back up, and we got rejected again. So, right now, we're in favor. We're the Bears basically have control right now. Now, kind of where we see things going into June here. This is a very important month. It's historical. I mean, today Jamie Dimon came out. He's the CEO of J.P. Morgan. Says to brace yourself for economic hurricane caused by the Fed. And I think he's right. And the one thing that I did take from this is saying you better brace yourself. I've been told the room full of analysts and investors, JP Morgan is bracing ourselves, and we're going to be very conservative with our balance sheet. Meaning, like, hey, we got to pump the brakes. We're not going to be as aggressive. We're not going to be trying to buy all the dips. We're just going to do what's the best for our company. Maybe we'll make some money in commissions, but right now is the time to conserve. So people are the banks are pulling it back. They're going to be making a lot more money in interest rates. Interest rates are higher, so they're going to be making more money. They don't have to be as aggressive in the markets versus when interest rates are zero. They're going to be very aggressive. Right now, interest rates are climbing pretty much every month right now, and they just want to keep some, they want to keep some of the powder dry so that they can get through the next couple years, essentially. And honestly, we're in for a very rough ride here. And I mean, people think that, like, the worst is over. Like, oh, what's the worst that could happen? And Dow's already down. A lot of stocks are down 80%, 90%. What's the worst that could happen, right? And I've been saying this whole time, like, hey, we're just getting started here. Like, this thing is just starting here. And the reason why I said that is because, sure, we have high inflation and everything, but to get inflation under control, we're going through rate hikes at a period when the economy is starting to slow down, which has never happened before. On top of that, The Federal Reserve, starting in June, which is this month, is saying that they're going to start reducing their balance sheet. So before we had quantitative easing. So as you can see, quantitative easing is, the Fed is buying pretty much everything they can, and we just went parabolic after COVID. But however, even after COVID, they just kept going more. I mean, we if we look over the last 6 months, I mean, this thing is higher than it was 6 months ago, right? Even though the stock market has been going down, they're still buying. They're underwater on their bonds. I mean, the Fed is a mess. And if you looking to any political power or anybody in government, or even me or whoever, like, nobody knows. Like, I don't know what's going to happen. All I can do is, for my investing strategies, assume the worst and hope it doesn't play out. But if it does play out, I'm going to be prepared. Like, are you going to be prepared? Leave a comment below. Let me know. Hit the like button if you can. I definitely would appreciate it. So I do my best as an investor, as a trader, to be prepared for all outcomes. I'm not really caring what's going to be happening next week or anything like that. I want to see, okay, how are my investments going to perform? What's going to happen? And right now we're at the start of this. Now you could say, hey, maybe they know what they're doing, right? Maybe they don't know what they're doing. But Janet Yellen came out today and said that they were wrong about the inflation path. Even last couple of weeks ago, Powell said, oh, if we knew what we knew now, we would have acted quicker. I mean, nobody knows. Nobody in government knows. Everyone's just guessing, just like you and me. Everyone is just guessing. We don't know what's going to happen. They're trying to control one thing. Once they control one thing, another thing happens, and then it's like a domino effect. Controlling inflation is a very, very, very difficult thing, right? So you're going to say, hey, how are they going to start quantitative tightening or reduce the balance sheet? And right now, the schedule, and the thing is, like, I'm not saying that they're going to tank the market. Maybe nothing happens. Maybe it's not going to be so bad. But if you have like one of the biggest buyers on the market unloading, in my opinion, it can't be good. Now, I'm not saying we're going to go like crater tomorrow. I mean, was the price action today because the Fed was unloading? I'm not sure. We got to kind of wait for the data to come out. I would say I would be a little bit more suspect at the end of this month. I'm not trying to buy the dips. I'm not trying to get crazy. I'm not even trying to hold overnight right now. Right now, I'm just taking it a day at a time. But essentially, for the next 3 months, they're going to be unloading 47.5 billion per month for the first 3 months. Then after that, they're going to go to 95 billion a month, where they're going to start unloading 95 billion a month until they start really putting a dent in this thing. But if you look at it, I mean, it's gonna take a bit. I mean, in the last year alone, they're up over $1 trillion. So if you think about it, if you're trying to reduce the balance sheet and you're doing it $500 million and then go up to 50 billion, then go up to 100 billion, that's going to take 12 months or more to get to $1 trillion. So even if they stick to this policy, which we don't know, a lot of people are betting on like, oh yeah, they can't stick to this because they're going to see how bad the market's going to perform. The thing is, the Fed, I think, is ready to go nuclear because the inflation rate, if inflation gets out of control to a point where you can't control it, those are the types of things that topple governments. And I'm not going to go into that. You can do your own history research. But if you look at the inflation rate right now, and this is 22 right now, 2022. If you look last year, the average was 4.7, right? And it really started to just uptick during the summer. So June, July, so April, May, June, July, and then we started to get up to like 7.5. But the thing is, like, the Fed saw us go from, look at here, 2.6% in March to 4% in April, then 5% in May, and this is a low number, by the way, but this is the number they go by. And every month it just kind of keeps ticking up. Meanwhile, they just started raising rates in 2022. They did not start raising rates when it started to go up to 5%, 6%, 7%. When did they start? When it hit 7.9, 8.5%. So now we got a really big problem, right? And they started really, 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 really slow. I mean, so for them to start, decreasing inflation, which you might say, okay, we got an 8.3. We went from 8.5 to 8.3. On June 10th, we're going to have the new data, which was going to be super important. So like I said, this month, towards the middle, towards the end, is what we need to be concerned about. I'm not trying to get super aggressive, right? I'm not trying to get super aggressive. We got a lot of data coming out. We need to see what this print is, this inflation print is, because if it's higher, that means the Fed is going to be more aggressive to get it under control. And I mean, if you haven't looked at it already, I mean, gas is at all-time highs. All this stuff is just skyrocketing, right? But in order for them to get inflation under control, they have to bring the economy to a halt. They have to stop growth. And that's what they are trying to do. Right now, the employment rate is pretty low. I mean, back in March, I mean, this is the latest data we have is like 3.6, 3.7%. I mean, we're at like all-time record lows. And for me, like as long as the unemployment stays low, everything's going to be okay. But the concern is once unemployment starts ticking up and people are going on unemployment, they can't afford the homes, they can't afford the gas, they can't afford the food. This is where people are going to start feeling some pressure. And I honestly, I hope it doesn't happen, but I have to, as an individual, as a retail investor and trader, I have to be prepared for all outcomes, right? But we're already starting to see like massive layoffs across the board. So pretty much tech is just laying people off left and right. I mean, you had Robinhood lay off 9% of its employees. Peloton reduces workforce by 20%. Carvana, they brought their headcount down 3,000. They fired everyone over a Zoom call. You know, Amazon said they're overstaffed and they have way too many warehouses. So, you know, I tweeted this the other day where greed will drive the market. Like basically, you know, greed is going to, you know, the more greed there is, the more issues we're going to have and the longer it's going to take to recover, because everyone's just kind of overshooting, and Wall Street loves to overshoot, right? But when things starts hitting the fan, you got to really start pulling it back, and when they pull it back, they're gonna pull back hard. So, you know, there's been a lot more, I would say, hiring freezes. But in my opinion, like what happens is, you know, first you stop the bleeding. Okay, let's stop hiring people. Everyone relax. Let's stop the bleeding. We're not going to hire people. But then they have to get to a point where they's like, okay, we need to start making money. And that's when layoffs start to happen. And that's when things are going to get a little dicey. So, I mean, you had, you know, Facebook or Meta, whatever you want to call them, have a hiring freeze. Walmart, Netflix, Salesforce, Wayfair, Amazon, Uber. I mean, and this is just like the top. This is happening industry-wide, right? So what I'm just trying to say is, hey, I don't think this is going to be any type of like what they like to say, soft landing, right? As long as like, you know, we're trending below the 200 day, and there's still a lot that needs to happen. And, you know, maybe the Fed won't go along with the plan. Maybe they'll get scared. But the reason why they can't get scared is because they have to get inflation under control. So let me know what your thoughts are. Hope this video was helpful. As always, stay safe, stay green. It's us, Fresh Third.